Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So as I already said today in a video on the Forex market, yesterday it was an important session. It's not because we were correct on the negative gross domestic product numbers or that these numbers were the second in a row and this market officially turns to recession, but the most value of the recent session is a press conference of the Janet Yellen on the results of these statistics. So how in general United States Treasury and potentially Federal Reserve would treat current performance of the economy. I will give you the link in a daily text update on the forum so you could watch it. But in general, Janet Yellen said that since we've got not as negative numbers on the second quarter compared to the first quarter, it means that economy stands in the growth stage, on a strong, stable recovery. So I did not want just even to comment this. So the one thing that I would like to say is that with this statement, it becomes evident the strategy that Fed finally has chosen. So if a month ago we still have some doubts what particular way Fed will choose, but currently it becomes clear that they were defeated. Fed was defeated by inflation, they capitulating, and they intend to switch on the printing machine again. This is perfect combination for the gold market. Biden also has announced new supportive measures for more tax gathering for the 600 billions, some social additional help for the 1 trillion. So it's just becoming the same COVID stimulus that have been eliminated first. Now they are launching again because they actually do not know what to do with the current situation. What does it mean? It means that inflation will keep going higher, and I will not be surprised if we will get it within the few months or maybe half of the year, around 20% in the United States with the policy that they are following. And simultaneously, the Fed will use the liquidity to control the interest rates. They will hold them around 3%, maybe slightly higher, maybe slightly lower, but in general it will be 3.5 maybe. So, and that just will increase the negative interest rates. So it will be artificial control by the money printing. At the same time, the household's wealth, the population wealth starts deteriorating, pushing the population in the poverty. And it just leads to the even more and just more disaster collapse later. Currently, yes, it will look like everything becomes better. Stock market starts rising, Bitcoin market starts rising, interest rates start falling. So it seems that everything returns back to normal situation. But that will be artificial impact. And when you will see that inflations keep rising, if they will not turn to the direct falsification of the statistics, I do not know what they also could do. That will lead just to disaster, but maybe not in this year. So I think that they would like to get the time until the elections. So this is one of the political component of the current policy. What does it mean? It means that in the gold market, the reversal that we have talked about, it might coming really sooner than later. In the shorter term, you could say that market in general goes with our performance that we suggested, and we still keep watching for this initial area that we discussed. So this will be around 18 even, confluence, daily overbought, previous lows. This is a strong resistance area where market gravitates to. Here we are following mostly with the pattern that we have from the 4 time frame chart. This is ABCD pattern. Market almost is coming to the OP. It probably could be reached today, 1770 area. So if you have long positions, I don't know, maybe you manage your stops or even take some profit around this area. And then we could keep an eye on the reaction. So if we get some pullback supposedly to the 30% 1750 area, or even to the confluence retesting of these tops. Here might be minor bread and butter buy trade might be formed if market drops to 1747. So all these setups might be considered for a possible taking the long position with a further action to the XOP, because this shift in the Fed policy is not short-term, guys. This is not just for inside for intraday trading. This is big shift, and it will make the impact and echo on the markets for a considerable period of time. Market will have to set the new balance corresponding to the new strategy, and they will first analyze it for a few sessions through the weekend probably, and then we could get absolutely new trends on all markets across the board. That's why I think that reaching of the XOP of the 1806 seems very probable. So that just confirms things that we said recently, that probably we already have hand shoulders in place, and as we said, it's probably market should pass for the COP, and that has happened. So on the COP was very small reaction, but it was perfect just because with the COP reaction, market just retested the neckline. This is bullish and this is great. So that's actually what we have on the gold. First watching 1770 reaching an OP, then watching for a pullback, some retracement, supposedly at least to the 1750 area. Maybe even we get the bread and butter here, that intends to use for taking the long position, but supposedly that might happen already, not today, but on next week.